We hope that everyone had a fantastic Memorial Day weekend. And good morning, and welcome to this week's PFL podcast. I'm Curtis Chandler, and we've got a lot to report on today. The Iran framework is reshaping the crude curve. Enbridge apportionment hit multi-year highs, and the STB faces a critical deadline Friday on the UPNNS merger. Equities closed higher on Friday of last week across all major indices. Full closes are in today's report. In overnight trading, Dow futures are trading higher and are expected to open up 233 points from Friday's close. Cruise handed back a chunk of the war premium last week. WTI sold off nearly 6% after President Trump told reporters the U.S. was in final stages of talks with Iran, settling at $96.60 per barrel, still roughly 50% above pre-war levels. WTI is poised to open down $3.79 per barrel from Friday's close. Commercial crude inventories drew down 7.9 million barrels week over week, putting us at 2% below the 5-year average for this time of year. Gasoline stocks fell to 214 million barrels, the lowest level since November, while propane bucked the trend and is sitting at 51% above the 5-year average for this time of year. Breakout of all inventories in today's reports. Rig counts in North America closed higher, 21 rigs week over week. The U.S. sits at 558 active rigs, Canada at 138 active rigs, and collectively we added 16 rigs a week or year over year. On the rails, total North American weekly rail volumes were up 5.09% in week 21 versus same week last year. 10 of AAR's 11 major traffic categories posted year over year gains, led by grains up 14.7%, and coal was the only one down 6.63%. Now to the stories we are watching out there for you. We continue to watch Hormuz. The mediated framework brokered through Pakistan turned material over the weekend, reportedly including a 60-day ceasefire extension, demining, and reopening of the strait. See today's report for further details on that one. A portion on Enbridge's main line jumped to 19% for June heavy crude nominations, the highest levels before TMX came online in May of 2024. We continue to watch the STB, while the STB faces a May 30th deadline to rule whether the refiled UPNNS merger application is complete enough to advance to formal review. All 4 of the Class 1s remain on record opposing the deal, with the BN citing hundreds of documented problems. Please read all about it in today's report. Kira, AltaGas, and CN announced a $240 million LPG project last Wednesday in Alberta's industrial heartland. The terminal will move 45,000 barrels per day of propane and butane on unit trains to AltaGas's Wrigley Island facility, expected to be in service in 2028. A structurally important corridor for Canadian LPG export story. Also in Canada, we continue to watch left-wing Carney. The Prime Minister was in Vancouver Wednesday pitching the Alberta to Pacific bitumen pipeline he and the Premier signed the week prior. BC Premier Eby pushed back hard on the tanker moratorium. The Oil Sands Alliance came out swinging against the Canadian $100 per ton embedded carbon tax in the deal. No agreed route, no proponent, no capital, in our view, politically motivated and short on legs. Finally, the Build America 250 Act cleared the House Transportation Committee on Thursday of last week. But a railroad safety amendment folded it into the bill is going to increase costs for freight shippers, real money if it survives the Senate. The amendment mandates expanded wayside defect detectors, two-person crew minimum, slower speeds for hazardous material, and accelerated DOT 111 phase-in. Well, that's where the market stands heading into this week. As always, PFL provides full-service rail solutions across North America: storage, leasing, subleasing, car cleaning, repair, flaring, scrapping, nitrogen generation, and transloading services. If you found today's update useful, please pass the report to a friend and colleague for them to have a read. Well, we hope you have a good, safe week and good luck out there. Who knows what's going to happen?